Something just happened that could change two industries at once. The tech world and the metals market have collided, and the spark came from a single company, Nvidia. For years, silver was the forgotten metal, overshadowed by gold, copper, and lithium. But as of today, it's suddenly the center of global attention. Because what Nvidia announced this week wasn't just another chip update. It may have triggered the start of the Silver Supercycle. And as this video goes live, Nvidia's latest earnings call has done something no central bank ever could. It's woken the world up to a metal nobody was watching. And now, the question on every investor's mind: how can one company in Silicon Valley send shockwaves through the global silver market? Nvidia just released its year-end earnings, confirming record chip production for 2026. But what really stunned analysts wasn't the profits. It was the new order data from data centers around the world. AI infrastructure is expanding faster than anyone predicted. Data center demand is rising not linearly, but exponentially. And inside every AI server, every next-gen GPU, and every EV power module, one thing keeps the system stable: silver. Silver is the most conductive metal on Earth. Better than copper, better than gold. Each high-end chip uses grams of ultra-pure silver for signal transfer and heat dissipation. It's invisible in the final product, but absolutely essential. So when Nvidia announced plans to expand chip output by over 40% for 2026, commodity analysts instantly realized what the tech market hadn't noticed. This means millions more chips and tons more silver. By the end of the earnings call, investment desks in Singapore, London, and New York were already updating their models. The result: global industrial silver consumption forecasts jumped 20%. That's the biggest single upward revision in a decade. Within hours, futures contracts surged. By market close, the silver price had moved more in one day than it did in the entire previous month. Why such a dramatic reaction? Because this isn't speculation. It's real physical demand from companies with billion-dollar purchase orders and fixed delivery schedules. When AI and EV factories start consuming metal, they don't stop. They don't trade silver, they use it. And that's what makes this moment different from every price spike before. Every artificial intelligence processor, every electric vehicle inverter, and every 5G antenna depends on silver. It's used in solder, wiring, and micro-connections that no substitute can match. Replace silver with anything cheaper, and performance drops. Use too little, and devices overheat or fail. So when both AI and clean energy rise together, demand collides. Here's what makes it worse, or depending on your perspective, more interesting. Supply is already tight. The world's largest silver producers, Mexico, Peru, and China, are already operating near capacity. Mines take years to expand, and environmental regulations slow every permit. According to the Silver Institute, global silver demand in electronics rose 13% year over year in 2025, even before Nvidia's announcement. That's before AI servers and EV factories start scaling at full speed in 2026. So what happens? When this new wave of industrial demand hits a market already in deficit, prices don't just rise, they break patterns. Visual, graph overlay showing supply deficit widening. For the third straight year, global silver supply is projected to fall short of demand, and that gap is widening faster than anyone forecast 6 months ago. This is how commodity cycles begin, quietly through small data points that most investors ignore until one day everyone realizes they're late. The first signs came within 24 hours of Nvidia's announcement. Futures trading volume on COMEX spiked 300%. Physical dealers reported sudden shortages. Premiums rose at major bullion suppliers in the US and Europe. Even retail investors, many of whom didn't already know silver was used in chips, started buying up coins and bars. But the real story wasn't retail. It was institutional. Tech investors, seeing Nvidia's explosive guidance, began rotating from semiconductors to metals ETFs. On Bloomberg terminals, the pattern was clear. NVDA were 6%, SLV were 4%, SILJ were 5%. The same portfolios that used to track AI stocks were suddenly watching mining tickers. That's when analysts realized the AI trade had just become a silver trade. And the symbolism wasn't lost. The technology that runs on electricity, chips, and innovation now depends on a mineral that comes from rock and soil. Silicon may build the brain of the future, but silver carries its heartbeat. The trade that began in Silicon Valley is now rewriting the metals market. While traders focus on daily moves, macro analysts are looking at a much larger picture, one that combines technology, energy, and finance. For 3 years straight, the world has been in a silver supply deficit. 2026 will likely mark the fourth and largest in modern history. That means the gap between mined silver and consumed silver is no longer a warning sign. It has a structural imbalance. And here's where it gets serious. AI, solar, and EV industries are now competing directly for the same ounces of metal. A single hyperscale data center can contain up to 50 kilograms of silver in wiring, connectors, and cooling systems. A large solar farm can use 20 tons. Put those together and global industrial demand looks unstoppable. At the same time, the Federal Reserve is signaling the start of rate cuts in 2026 to counter slowing growth. That means investors are once again searching for inflation hedges, tangible assets, and commodities with real scarcity. Silver sits at the intersection of those forces, part industrial metal, part monetary hedge. It's both storylines in one chart. So when analysts say silver is entering a supercycle, it's not hype, it's math. Demand rising across industries, supply stagnant, monetary easing returning. This isn't a pump, it's physics, economics, and timing aligning all at once. And yet, the public still hasn't fully noticed. While retail investors debate gold or crypto, the world's smartest engineers and largest factories are quietly consuming the real finite resource, silver. Once this awareness hits mainstream finance, the feedback loop could begin, where investment demand amplifies industrial demand, and both keep pushing in the same direction. That's how cycles turn into manias. It happened with oil in the 2000s. It happened with lithium in the 2010s. Now, history might be setting up for silver. Already, whispers are spreading across the market. New ETFs being filed under names like AI Metals Index and Smart Commodity Fund. Investors are realizing that the technologies shaping the future depend on elements forged in the past. The next big story in tech might not be a chip or a code. It might be a metal. And this time, the market isn't guessing. The numbers are right there. In Nvidia's production guidance and mine reports and customs data, when demand outpaces supply, something has to give. And when both Wall Street and Silicon Valley are chasing the same metal, the pressure can only build in one direction. Silver's not just shining again, it's evolving from a forgotten commodity into the backbone of the next industrial era. Because the future runs on circuits, and every circuit runs on silver. But what happens when the world suddenly realizes it doesn't have enough? The shockwaves from Nvidia's announcement ripple fast. Mining executives wake to phones lighting up. Funds that ignored silver for years start calling for offtake contracts. Smelters report advanced bookings that stretch months ahead. For the first time since 2011, miners have pricing power. Companies like First Majestic, Pan American, and Fresnillo announce production expansion plans. But remind investors that new ounces don't appear overnight. Even a greenlit project takes 5 to 7 years to reach full output. In that delay, a new scramble begins. Everyone from electronics giants to national mints competing for the same limited supply. Wall Street finally catches up. Analysts release bullish notes with headlines like "Silver forecasts the new silicon." Trading desks that used to ignore the metal now track it hourly. By February 2026, silver ETFs record their highest inflows since 2020. Retail investors join in, not with memes this time, but with research. YouTubers, finance TikToks, even mainstream anchors begin repeating the same phrase. Silver is the missing link in the AI revolution. The excitement feeds on itself. Spot prices break technical resistance at $38, then $42. Analysts revise year-end targets to $55, then $70. Every dip is bought. But amid the frenzy, one truth remains. Physical supply isn't expanding. The world can move digits, not metal. In Shenzhen, factory managers watch prices climb daily. Procurement officers for EV and solar firms start panic buying components. Every kilogram of silver allocated to chips means less available for panels, and vice versa. Soon, production schedules begin to clash. Energy companies blame tech firms. Tech firms blame the metal traders. The silver shortage becomes an industrial bottleneck. Governments step in. The EU discusses temporary import subsidies. The U.S. Commerce Department holds closed-door meetings with miners and recyclers. China, meanwhile, stays silent, quietly expanding domestic refining capacity. On the Shanghai Futures Exchange, volumes triple. Chinese buyers keep paying premiums over Western prices, ensuring that any loose bar anywhere in the world ends up in Asia. Silver, once a footnote in trade reports, is now a strategic resource. Think tank papers start using new vocabulary: resource sovereignty, technological metal security. And in the middle of it all, Nvidia's supply chain becomes a geopolitical map, stretching from Latin American mines to Asian assembly plants. What began as a corporate announcement is now shaping diplomacy. Beijing quietly announces a green metals initiative. Analysts interpret it as an effort to formalize silver stockpiling. At the same time, Washington drafts incentives for domestic recycling and exploration. The race isn't for discovery, it's for control. Because whoever controls the flow of silver controls a slice of the AI and energy future. By mid-2026, silver has become a narrative as much as a commodity. News cycles link every Nvidia milestone to another surge in the metal. Speculators flood in, long-term investors hold firm. But under the volatility lies a shift in psychology. people finally understand that digital progress still depends on physical reality. Financial influencers begin using a new analogy. In AI, data is the fuel, but silver is the wiring. That single line goes viral. And for the first time in decades, a precious metal trends alongside a tech stock. By autumn 2026, silver trades near $85 an ounce. Analysts debate whether it's overvalued. But then another Nvidia update hits. New generation GPUs, even more silver intensive. Suddenly, what looked expensive becomes the new baseline. The market starts to price silver not as a luxury metal, but as infrastructure. Mining CEOs give interviews saying, "We're not producing a commodity anymore. We're supplying technology." It sounds like a slogan, but it's true. Silver is now embedded in the world's most critical growth sectors. The era of cheap silver is officially over. Economists look back and draw parallels to the oil shocks of the 1970s and the copper boom of the 2000s. Every industrial age eventually collides with material limits. This is AI's version of that story. The market forgot that the digital world still has a physical cost. Now it's remembering expensively. And in that lesson lies opportunity. Investors who understand the link between technology and resources stand to gain most. But the real takeaway isn't about price targets. It's about perspective. Because silver's new role isn't speculative, it's structural. It's the bloodstream of innovation itself. The Silver Supercycle isn't just about profits or charts. It's about realizing that every leap forward, every algorithm, every chip, still depends on the earth beneath us. When Nvidia's CEO ended that earnings call, no one expected a metals rally. Yet in hindsight, it makes perfect sense. The smarter our machines become, the more they rely on the most basic elements of nature. And so, the story of silver becomes the story of balance, between progress and resource, between code and matter, between what we imagine and what we can physically build. If one company's announcement can expose the world's next resource squeeze, then silver isn't a trade. It's the foundation of the next industrial era. Because behind every AI breakthrough, there's a spark that only one element can carry.